Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 18, 2018, and I thought I'd take a look at natural gas, the ETF being UNG tonight. We have a mixed bag here on the trends, short-term to the upside, the intermediate is to the downside, and the longer term is to the upside. It's kind of a mixed bag here, and some funky things are actually taking place here. We have the technical rating, which is negative, and we are coming up against some resistance, which I'll show you here in a second. When it comes to some of the pro alerts, the patterns, here again is natural gas all the way across here. We had a pop high that occurred today, and we had a T-rope, what T-rope stands for tightrope, that occurred yesterday. And so what I thought I would do is just simply show these particular markets here just so you can get an idea. I mentioned that it's coming up against resistance. The system's actually liquidated here on the 17th that had been long. They're now currently flat, which I'll show you. But it's this resistance level here that the market came literally right up to it. It didn't actually touch it, but it came very, very close. The resistance is at 3.31, and the high yesterday was at 328, call it 29 if you will, and the high today was at 326. So the systems actually liquidated themselves yesterday on this particular bar. These are daily bars here, and they're now obviously flat. We're just kind of waiting and watching and seeing what actually is going to take place here. We had an elastic high that occurred here just a couple of days ago, which is a kind of a precursor, kind of alluding to the fact that the market might be getting a little ahead of itself, to which it did. I'll show you the pro alert patterns. And here is the T-rope that occurred yesterday. And T-rope is when the market itself starts to interact with certain types of moving averages and does an about face. That's what T-rope basically represents, and that happened yesterday. And the pop top is where the market has had a thrust and basically runs out of momentum. They're two separate pro alerts. They're looking for different conditions. They don't always occur at the same time, but the system's having liquidated their long positions here on the 17th. It's looking pretty good here for the time being. We'll see what does take place here with the in this case the 200-day moving average, this faint kind of a grayish white line that's coming right through here, and what is obviously happening here with the resistance level, this 24, you can see it right here, but the signal level is certainly telling us that this is resistance to the market. So what's the game plan? Well, the systems have us flat, which I'll show you, but what you want to do is you want to watch this threshold, this level, this resistance of 3.31. That's the key number you want to look at. If there's a big surge beyond that, then the next resistance right through here is going to be at 346, called 347 basically, and so that would be a nice move up to that level, but it's going to have some resistance, just as there's some resistance back here as well. So the likelihood is that it's going to kind of meander, and I guess because of the pro alerts, those T-rope and those pop tops having occurred here, I would suspect that we're going to see a closing value, not just a lows, but the closing value come down to this particular level. But we're at a I use the word energy because I've got energy level indicators, which is this one right through here, but when it comes to support and resistance, there's an energy level that can occur here. You can see that we have resistance here, and we have support, very strong support right through there, and it basically is squashing, if you will, the market. And when you get into that phase, and we've just gotten into this phase here just over the last, since the 12th of January, it starts to squash itself. It ping pongs back and forth between the support and support and resistance. And the longer we go into that kind of an energy level, it just heats up and wants to explode all the more. It's similar to from a different perspective, if you will, of just normal consolidation from that standpoint, where we have other indicators that look at that. So we call that more of an energy band when it comes to the support and resistance levels. So when it comes to the website, let's just take a look at a couple things here real quick. I mentioned that the systems were flat. You can see as of a little after 5 o'clock Eastern Standard Time, everything is flat. The systems liquidated themselves both yesterday in the evening time around 9 o'clock Eastern Standard Time. We liquidated both positions inside of the inside of natural gas. I popped this one up just because the energies typically based upon our systems, our style of trading, the variety of styles, the variety of time frames. So I'm sort of just painting a picture here for you that our trading systems have a tendency to be pretty consistent, which is really what we're looking for. It's not always profitability. Everybody looks at profitability. How much money did you make? What is your percent accuracy? From our perspective, it's more along the lines of consistency over time, and the more consistent a system is, the higher it ranks, the higher the ranking across all the different time frames and all the different trading styles. That's where you get your grading system from. But for our purposes, between crude oil, natural gas, and heating oil, there's really good consistency. And I know it looks kind of fake here, the fact they're at 100%. There's a sliding scale here for this market and all the other markets, but the energies typically do pretty well. It's not talking about being 100% accurate. That's not really what we're talking about. We're talking about a degree of consistency over time, and that's obviously what I prefer to look at when it comes to a grading for the individual market. So what are we looking at here for the seasonals? They're not highly accurate right now, so you have to take this with a grain of salt. Something else that always seems to happen. People always look at these types of charts, and they're always saying, well, exactly what's going to take place, and why didn't things happen exactly the way they're supposed to? The reality is that when markets are in a high degree of accuracy, which natural gas is not in one of those phases, then you give less credence to the seasonal charts. But I'm simply showing this not for the 1 or 2 or 3 day type scenario. I'm just simply showing what's basically happening here on a 10-year chart, that the tendency into early part of March in natural gas is to the downside. People think that, well, it's cold outside, therefore natural gas should be very, very popular, and you'd think that price would be heading higher. But the result is you have a lot of volatility for the most part, at least in the 5, less degree on the 10-year. I even pull up the 5 and 10 and the 15. All of them don't look at the individuals, just simply look at the general trend for most of these time frames, that at least into mid-February, which we still have another month to get to, and in many cases you're still looking at for the 5 and the 10 years into early part of March before things really start to bottom out. Now, I'm not talking about the seasonal tendencies from the standpoint of the accuracy and should you be looking at this thing on a short-term basis. I'm just simply pointing and painting a picture that the trends are typically to the downside. So the fact that we've hit this resistance level, which is going to act as major resistance, but if it should break, then pay close attention to it. The system is being flat right now and having taken their profits. For the most part, we're just kind of sitting back and reviewing the market. I think that for the most part, this market is going to make for some good moves here. But for right now, sitting on your hands, not trading it, taking your profits if you haven't already, watching it very, very closely, and looking for potential for a little bit of a retracement based on the seasonal tendencies in general, coming back down at least to some of these levels that I've been pointing out here. The next lower level, should it actually get to that level, you can see the cyan color. It's 2.952 in the little pop-up window. The other one over here, as I mentioned, is 3.106. So just to give you some perspective as to where the market could be potentially heading. But our systems, the way we're looking at things currently right now, we're free. We've stopped out of positions. We're good, and we're just simply sitting on capital, looking for the next opportunity to pop up here in natural gas. So when you look at some of these patterns, these pro alerts that I talk about, you always want to be looking at, in this case, natural gas. You've got the highs that are popping up. They are really going to give you pretty clear indications when you should be heeding the warnings and looking to take some profits whenever you're able. So the most recent one obviously was this pop top. It's always going to show up on here as a pop high, but that is most definitely something that is key, and it makes me feel pretty comfortable that we did the right thing. Well, not me, but that the systems did the right thing yesterday by liquidating their position. So we'll simply watch this market for a little while. I'm not saying to go short, I'm not saying to go long, just simply that being nicely hedged right now, or flat, I guess, is not a bad thing for us for the current time. So we'll take a look at another market tomorrow. Thanks for watching.